Welcome back. I'm Marie Ames, and today we are talking about something that has been all over the news: marijuana reclassification. Now, I know some of you are thinking, Marie, what does this have to do with dividend investing? And the answer is more than you might think. First, let me tell you exactly what happened, because there is a lot of noise around this story, and I want to give you the facts. President Trump signed an executive order to fast-track the reclassification of marijuana from Schedule Y to Schedule 3 under the Controlled Substances Act. Schedule Y is the most restrictive category. It means the federal government has considered marijuana to have no accepted medical use and a high potential for abuse. Schedule 3 is a much lower classification. It is the same category as things like ketamine and certain anabolic steroids, drugs that have recognized medical applications and lower abuse potential. Now, before you run out and start buying cannabis stocks, I need you to hear this clearly. This reclassification does not make marijuana federally legal. Marijuana remains illegal to transport across state lines. What this order does is begin to ease the restrictions around it and open the door for the FDA to study it for medical purposes. It is a step, an important one, but it is not the finish line. So why are we talking about this on a dividend investing channel? Let me explain. There is a provision in the federal tax code called Section 280E. Because marijuana has been classified as a Schedule I controlled substance, cannabis businesses have not been allowed to deduct normal business expenses on their federal taxes. Think about what that means for a company. You are running a legal, state-licensed operation, but the federal government is taxing you on your gross revenue rather than your profits. That is a crushing tax burden. Some analysts have estimated that individual cannabis retailers in high-volume states could save over $800,000 per store per year if 280E is removed. Multiply that across a company with dozens of locations, and you are talking about a dramatic improvement in profitability. And what do more profitable companies have more capacity to do? Pay dividends. Now, I want to be straight with you. Most cannabis companies do not pay dividends right now. The industry has been fighting for years just to stay financially stable under the weight of high taxes, banking restrictions, and regulatory uncertainty. These companies have been focused on survival, not shareholder returns. So if you are looking for income today from a cannabis stock, you are probably going to be disappointed. But here is what reclassification unlocks over time. First, the tax burden drops. Companies keep more of what they earn. Second, banking access improves. Right now, most banks will not touch cannabis businesses because of federal restrictions. That forces cannabis companies to use expensive alternative lenders and pay higher borrowing costs. Better banking access means lower costs and stronger balance sheets. Third, and this is big for dividend investors, cannabis stocks could eventually uplist to major exchanges like the NYSE and NASDAQ. Right now, most of them trade on smaller exchanges because the major ones have been reluctant to list federally restricted businesses. Uplisting brings in institutional investors, increases trading volume, and adds legitimacy. That is the kind of environment where dividend programs get initiated. And And let's look at the size of this market. The U.S. cannabis market was valued at $30 billion in 2024 and is projected to reach $77 billion by 2030. That is not a niche industry. That is a sector on its way to becoming a major part of the American economy. Somewhere in that growth story, there are future dividend payers. The question for us is when and which ones. So what do you do right now as a dividend investor? If you want some exposure to this story today without waiting for cannabis companies to mature into dividend payers, consider looking at adjacent sectors, real estate investment trusts that lease commercial property to cannabis operators, agricultural companies with hemp exposure, pharmaceutical companies that could benefit from expanded FDA research access under reclassification. These are sectors where you can collect dividends today while still participating in the broader story. If you want to watch the cannabis space directly, that is a valid choice too. Just go in with clear eyes. This is an early stage story. The dividends are not here yet, but the regulatory foundation that could one day support those dividends is being built right now. Being built. I always say that the best dividend investors are patient investors. They watch a story develop. They understand what needs to happen before a company is ready to return cash to shareholders, and then they position themselves thoughtfully. Marijuana reclassification is a story worth watching. It is not a story worth chasing blindly. Do your research, know your timeline, and never invest in something just because it is in the headlines.